IVM.
Hey, welcome to Shunya One, episode 26. I can't believe we've been doing this for a while now, and across all these episodes, I think we've met so many interesting people from the startup ecosystem, including obviously last week's episode with Zishan, and we've got quite some feedback from all you guys on our Slack channel as well about how insightful it was, and it indeed was. I think we don't have too many folks who can help us go so in-depth into the education sector, and I'm glad that we were able to do that last week. And obviously, shout-outs to a few new folks joining us on Slack as well. Vibhor, Abhishek, Mukul, and of course Bhav Kaka, who's been giving us regular feedback. I think you guys should definitely jump in and give us more feedback about what kind of topics we should cover, because I think across all these episodes we've spoken to so many folks who have come from different backgrounds, but there's so much more out there. And as we'll hear even on today's episode, there's more on both sides of the table, including whether you're a founder, whether you're an investor, whether you're someone looking to get into this space in so many ways. And we'll keep talking about startups and entrepreneurship and more. So let's jump on board and get started. All right, so today we have Japan Vyas, who's a dear friend, a venture capitalist, seed investor, angel investor, mentor to a bunch of startups, and obviously your co-founder and managing partner at Sixth Sense Ventures, which is a fund. And so I obviously know you for a couple of years now. You're an angel investor in Hipcask, and you've been, angel investing for quite some time. I think there's some really exciting companies that you're involved with. What can you tell me about your story so far in terms of why this space excites you and what got you in? Any early anecdotes you can share? Because I think even till date, there's so much unknown around what angel investing really is.
Yeah. Thanks for having me here.
Happy to have you.
And wonderful introduction. Sounds good. I've been an investor all my professional life almost. Started with the lending side of the business on infrastructure. Moved on to head a alternative asset management business within IDFC. So that was around 2008. Mm-hmm. That's where we invested into Paytm, amongst the earliest investors into Paytm. I think that's where the journey or the experience of investing in early stage businesses, new age businesses started and moved away. I started moving away from more of infrastructure financing businesses. And then it's become a part of what you do. Jokingly, I tell people that यही करने आता है, investing ही करने आता है तो और कुछ कर नहीं सकते हैं, right? So that's what I do. Professionally, we run funds. Personally, I do a bit of seed investing because that helps, enhance the ecosystem. There are a lot of people who need a bit of hand-holding, opportunities which are interesting, maybe very risky from a professional fund point of view. But as part of the ecosystem, you want them to get an opportunity to create something interesting.
Right.
So that's where I started angel investing. I think somewhere down the line, I've moved away from angel to lot is not the right word, bit of seed investing where I invest really early stage in technology or impact businesses or in businesses which are in difficulty.
Oh.
Right. So startups again. Yeah. That kind of... I think that's where I can bring some of my strengths to the table and help the founders maybe take a second shot at the opportunity.
Right. So now you mentioned 2008, which was rather a very early period for the startup boom that we see today. In fact, I don't think even apart from Paytm, there were very few. Paytm wasn't even a known brand at that point.
It was 197.
It was 197, back then.
Yeah. So were you at that point also still seeing it as a startup, or were you looking at it as a proper business play, which was just another business up for investment?
Yeah. I think Paytm is a success story which everybody will want to claim credit for and being associated with and having spotted it. For us, purely it was a business opportunity that we looked at it. It was a part of a fund where we were investing into infrastructure businesses, which also included telecom services. right? And 197 was a large Vyas play. There was a small baby within 197 called Paytm, which was taking shape, ideas taking shape, etc. My investment was primarily based on the person, right? I think we invested around 2010 into it. It was a half an hour decision where I don't remember where I met Vijay, but I think we met in some hotel, heard him out, heard the story, and he can sell the idea and the vision, and you can see the passion in that man, right?
Right.
So that's what we backed into. It's morphed into a completely different animal, I think beyond the wildest imaginations of any of the early investors. And it's played out beautifully till now, right? So it was a business investment, and we all benefited out of the way it's morphed into a financial services play.
That sort of, I mean, that was one of the obviously large stories which you see today. But along the way, like you said, when you started getting into more on the seed and angel side yourself personally, that was also, you were pretty early in that as well, right? I mean, can you recount any of these?
Yeah, so I started doing this from 2014 onwards, after I moved out from IDFC to start Six Sense Ventures.
Yeah.
So again, as I told you, the objective over there was to help the ecosystem, be a part of the ecosystem, and that's how I did it. Primarily, my investment thesis is people matter. So most of my investments are based on the promoters, the founders, and backing them. And I typically, you wouldn't have heard of most of my founders.
Mm-hmm.
I like them low profile, doing their work, avoiding the limelight. And that's where I think one of the earliest investments, I think you also aware of it, is Dimension and XG, which is really creating deep technology into tracking and 3D reconstruction. Yeah. And hopefully in the next couple of months, you'll hear some good things about them.
Nice.
Create a bunch of technology. So again, personal investment is put into two brackets: technology investments and social impact businesses, right? So on the social impact side, there's a company called Khaddar, which is into khadi and handloom garments. There's a company called Happy Roots, which is into cookies and making biscuits and products out of indigenous grains, working with marginalized and tribal farmers. Products made by women self-help groups in villages. The founder is doing some excellent work in Vidarbh, awarded President Award winner, Government of Maharashtra recognized, Business World I think recognized her as a woman leader for 2017. So a lot of interesting work happening, real work happening on the ground, and you just feel fortunate to be part of that journey.
What led you to decide that you want to spend time doing social investments? That's not like something that most people generally. Was there a reason why you went into that direction?
So as I mentioned, I invest. So my investment thesis is very simple: people matter. I invest ahead of trends. So the first fund I invested, Paytm, where nobody knew much about it. That fund itself did infrastructure financing and outperformed the market significantly when people were losing money in infrastructure. Mm-hmm. The second fund in 2012, I was an early investor in RBL Bank, IndusInd Bank, National Stock Exchange. So each of those investments are 4-5x up from their cost price, much ahead of financial services became a hot topic in the market. Mm-hmm. Similarly, so I prefer investing where others are not investing sectors because I find value there.
Right.
And my belief is there's a lot that can be done on the social impact side. Mm-hmm. And you can create great consumer brands over there. I think people, when you talk about social impact investing, people think of it as doing charity, ya kuch hoga nahi usme. Right. I don't believe that. I think if you have patience over there, if you build the business well, you can create great consumer brands because people want to buy such stories, given an opportunity. So if you have great products and great stories, people will lap it up. And that's what we're trying to do over here.
And also, I mean, since you mentioned on the topic of social investing, it's also not a sector which, I understand the brand part, but it's also not a sector which a typical angel investor looks at simply because what kind of output... exit do you define in that space? Because technology, obviously, you assume that technology is going to go up a ramp, but social output, social companies, impact companies. How do you look just from a strict investor's hat?
So I think there are two ways to look at it. One, if the business is good, I don't want to exit them. I would rather keep owning those businesses, right? Second is, every social impact business in the front end could become potentially a very good consumer facing business. And if it is a good, strong consumer facing business, there will be a lot of takers for it. Right? Similar to any other consumer facing business. It's just that on the back end, you're doing a lot of impact work. You're really making a meaningful difference to the marginalized sections of the society.
Yeah, and that's where, that's the kind of focus here. So you're not necessarily saying something which is, I mean, when you think social impact, you sometimes think charity or,
Which is what I'm saying. So that's not what we're looking at. I think unless you don't make, the enterprise is not commercially successful, it is not possible to sustain doing good work.
Right.
And if you want to continue doing good work, you better create a good, successful business around it, because then you can have a greater impact. And that's what I am focusing on.
Yeah, so it's different from the pure play, just charity sort of social investing, which a lot of people do, which is...
So, not to put words in your mouth, but generally when people are looking at angel investors, angel investments, they're looking at some multiple of return. Yeah. Is this something where you look at it more like you want a profitable business, but are you looking in the same way for like multiple returns, or are you looking for it more in the sense like set up a sustainable business of this nature, which can then grow over much more gradual period? Or am I just talking complete rubbish?
Yeah, so let's put it this way. When people or friends come to me and saying, if you are investing, we want to invest along with you. And I'm telling you, are you mad? You are, it's a different ball game. You're better off investing in the listed markets as an investor to make your money, rather than doing early stage, unlisted, seed investing or angel investing. I do it, some others do it because you are part of the ecosystem. Motivation not necessarily always is making great returns.
Okay.
Because there's enough data points out there to show that I think the average returns still even out, right? You might end up making more money out of the listed market investing.
Right. Okay.
Here is because I think it's not only about making money, it's about helping create something, building an ecosystem.
Right.
And in that effort, if you end up making good money, so be it.
Yeah, sure.
I think that's a very nice thing to say and look at. But again, in my experience, of course, since you have the kind of background you do and you've seen multiple cycles of investments already, I guess that's where you give that much of benefit of doubt to the market. But I've seen a lot of other angel investors who have come up in the recent past who actually see this as like magic, I can, triple my investment in a few months just because if I can get another VC to sign up.
But as you and I know, magic is not the reality. So
exactly. So I think that's where, and I want to come back to talking about the other side
or the magic.
Oh no, I think of how other people view angel investing and what they probably have wrong. So
I'll just add over there. I think the Indian ecosystem is still young and it's shallow, both on the investing opportunities available as well as the investors and the founders, right? We are all learning.
Yeah.
So you will see a lot of people doing things for the wrong reasons. So investing, as you said, for making a 3x in few months, etc. But we'll all learn along the way. And it's still very, very early days in the Indian startup ecosystem. We are maybe a 10, 15-year-old ecosystem. So I think it will deepen, it will strengthen. And hopefully going forward, we will see lesser and lesser of such investments happening for the wrong reasons.
Yeah. No. So that's exactly my point. So when both sides have been accelerating and growing, right? Founders are starting companies left, right, and center for all sorts of reasons. Some of them not so great reasons, some of them really focused. And likewise, investors are also, they come in shapes and sizes. And obviously the ecosystem, like you said, is early, but how you tune what people see even today is mostly the successes, right? Mostly people look at the big gains, the big successes, and those become the benchmarks which form people's opinion about the ecosystem.
Yeah.
So given that, again, you've had a certain amount of experience even working with founders I'm sure you've met many who are of different characteristics and so on, and people who you may have said no to, like an anti-portfolio, as they say. what have been the markers in which you see, people going in the wrong way from your assessment of a founder, let's say?
So I think a lot of times when you see founders setting up a business because it's a copy of something which has succeeded elsewhere, I'm not usually very fond of such businesses. Second is you come across a set of founders who come with a chip on their shoulder and who expect that they need to get funded or ought to get funded because they come from a certain background, alma mater, working with certain companies, etc. I prefer to stay away from them. So I think from my perspective, these are two things which kind of...
What makes... Have you ever looked at, working with... Obviously, you must be co-investing and you have co-invested with a bunch of other investors as well. So what do you think of angel funds and these angel groups? And there are quite a few, not to name any of them. But they sort of, for me, I think I've seen the people who back those groups and people who are participants in those groups often have a very different viewpoint than you, who is an individual who's taking the time to meet the founder and understand the business and so on. So what's your take on those? Have you ever been a part of those?
So I personally have never been a part of any of such groups, but I think they all serve a purpose. They all help broaden the ecosystem. Individually, you or I might have a different way of investing. They might have a different way of investing, but they provide a very important source of early stage capital to the ecosystem. And I think they're doing a great job.
Even if it's sometimes for the wrong reasons and to the wrong people.
So, who are we to decide what's right or what's wrong? My right is your wrong, your right is my wrong. So I think that's how it is. And more the people in the ecosystem, the better.
So again, unlike most people, I would say, who are new to angel investing, see, you have a certain amount you have a process, you have the markers which you mentioned, you have a certain amount of confidence in the method you use. Most people may not have that.
Yeah, and that's where for them, and if they still want to participate in the early stage ecosystem, they are better off or well served by the angel groups.
Right. Yeah, but again, the expectations need to be matched.
Yes. So I think it's a cultural issue with us, right? We don't communicate clearly and we don't communicate directly.
Right.
So, and that's where most of the expectation mismatch happens in our society, right?
Yeah.
We don't like to say directly, be direct, tell the truth completely. But I think if you do that, you're fine.
And also, I don't have much sympathy for either side of that, right? The entrepreneurs are adults, the investors are adults, man. If they decide they want to do this and they want to work together, however they want to. One guy decides that, okay, I want to go to XYZ angel fund and take an investment which has got 18 different people participating in it. That's fine. It's up to them, right?
Yeah, it's the 18 different people who don't know the founder is when the
But then that's, starts. The entrepreneur knows what he's getting into, right? It's very, at least... So I've been to a couple of these things where friends of mine have been participating and they've asked me to come and help evaluate and stuff like that. And these are generally not like, fresher kids or stuff like that who are presenting at these things. They're generally fairly seasoned guys. So I really feel like, hey, if they want to take that, they should take that. Right? I don't see anything particularly negative about the existence of these groups. I wouldn't go to them myself. That's not my cup of tea, but
but it's absolutely okay. If you're starting out and you need access to capital, I think the founders or whoever is taking the capital need to appreciate that there's somebody or a bunch of people who are willing to give them capital. None of us have the God-given right of getting capital, right?
Exactly.
So if you're able to convince a person or a group of people to give that money, I think you need to respect that and take it. The question then is about nitty-gritties, the documentation, how do you... manage expectations of a bunch of people. How do you set your documentation such that a lot of your time is not wasted in managing a large set of investors?
I think that's the key thing over there.
Yeah,
right?
So I think there are various ways in which you can do that. And again, I come back to the same thing. It's a very valuable pool of capital, early stage capital, which is not so freely available in our country. Right. So I think we should treat them with respect, fairly, and have your arrangement and documentation such that both parties are happy about it.
Right. So again, I'm sorry, I'm bringing out all these. I'm wearing my founder hat very strictly today.
Please do.
Because happened to interact with a lot of investors over the years, and I feel there's one aspect of investing. So angel investing is a very, and I'm not claiming to even know the half of it. I've not done it myself. So it's a very, like you said, it's all about your gut feeling, and it's all about your confidence in the person you meet, and it's a person to person equation that you judge. Now when people take that for granted, whichever side, that's obviously not something you can do. But then at the same time, how do you do angel investing at scale? Let's say if you have a lot of money to distribute, how do you do it as an individual with each founder's hand holding so much? And is that the reason why these groups exist? Or I'm saying, where does my question is also to coming to even platforms like what we have, like AngelList today, which is trying to do syndication and so on, right? So that's an extreme optimization of this process. We are somewhere in the journey in India.
Yeah.
So what's your take on how this is evolving? Or is this a viable vocation to, get into for an investor?
So if you are going to, as an individual angel, invest at scale, then you're better off having a professional setup to manage that, right? Mm-hmm. So whether that's in the form of a family office or you give it to other angel funds to manage it, because there's only so much that individually that you can look after or manage, right? So I think that's the short answer of it. And the other thing to answer your other question is, we're still very, very early in our journey. So we will see platforms, and you're seeing platforms which are trying to organize this entire early stage investing process, right, which have evolved further on from angel groups, right? The more time we give it to them, we will see some of them succeed beautifully.
What are your thoughts of platforms like AngelList and stuff like that? Do you think those are valuable?
They are valuable. They provide, again, an alternative to the traditional way of investing and managing your investments. And they're doing, I think, a great job of...
you like this, the idea of like the lead investor and all the people following him and then putting in small amounts to and then that becomes the interface, because that solves one of the problems you were talking about.
Yeah, the lead investor, you basically put your trust in the lead investor and their decisions.
So I think that is what happens in a certain small way in India too, right? When you do through angel groups, unless
I think they still have a very individual.
Yeah, there's too much personality.
No one wants to take responsibility. That's another problem we have as a culture, right?
So why? I mean, let's put it the other way around. Suppose if I'm the lead investor, why would I take responsibility if I am not going to get anything in return from the other investors?
Correct.
Exactly.
Right.
Correct.
And that comes down to the old question that in financial services we are not willing to pay for services or advice and stuff like that.
Yes, we pay commission on execution.
Yeah. So I think all this is evolving.
Yeah.
So rather than criticize or critique anything the way things are happening today in our country, I think it's just so early days that anything we say today really doesn't matter.
It's not going to be true. A year
whole
from now,
system has
it's
to
completely
grow.
different. Yeah.
True.
Individually, each of us have to mature, grow, deepen our insights, and we'll all find our room to play into.
Great. On that note, I think we'll take a quick break and come right back.
Hey friend, so if you're listening to a podcast right now, you're probably some kind of a nerd. A nerd at heart, at least. So maybe, just maybe, you might like another podcast about nerds, by nerds, and for nerds.
It's called Geek Fruit, a community to unite estranged geeks from across India and later on the world. We talk about television, movies, science fiction, adventure, fantasy, etc. Anything nerdy, it's all here on Geek Fruit. You can catch a fresh episode every Monday.
And you can check us out on any of your favorite podcast apps. Like my favorite podcast app, the IVM podcast app. Give me my money, IVM.
Good plug.
Happy listening, you nerds.
Hey, welcome back, guys. So, more on the topic about angel investing and the pitfalls around it for either side. I think we had another guest on the show here, Miten Sampath, who's also an angel investor himself, and you know him pretty well. Recently, he posted about how, as an angel, he also has had to sort of face the short end of the stick, even though most stories about angel investors are about the ones which work out are great. You make many times your money, and the ones which don't, you took a risk and obviously you lost all your money maybe. But he had an interesting point where he's seeing cases where because of future VCs coming into the round and potentially multiplying an angel investor's wealth, a lot of founders are sometimes either themselves or by the VCs coaxed into, giving exits to angels, especially when they have a large cap table, and it's like very bluntly put how he put it as cleaning up your cap table, which is a term being tossed around. And that happens, I mean, it's sometimes maybe even justifiable when you have, let's say, 20 people on your table, and obviously maybe a VC wants to do this. What's your take on this whole entire experience as an angel, or this phenomena which is happening?
I think his core point was that basically an angel is taking total downside risk. It should also get total upside.
I completely agree with what he was saying.
Of course. I agree too. I agree.
No,
This happening.
I mean, look at it this way. I am putting my money, or anybody's putting their money at such an early stage, taking risk on a person or a bunch of people. All right. You cannot prevent that person from riding the upside as and when it happens, because you don't know really what's the percentage of success in such early investments, right?
Right.
I've myself come across such situations where, I'll not name the investee company, but one of the companies that I've invested into, who came to me one day and coming saying, sir, next round investment करेंगे, तो ये सारा जो riffraff है वो निकाल देंगे.
Wow.
And I blew my, he's like, sir, आप तो बहुत valuable हो, आपको नहीं बोल रहा हूँ, बाकी सब riffraff निकाल देंगे. And I blew my top off. And I was sitting in the Starbucks below my office. I'm like, how dare you? These are the people who have looked at your face and given you money. You were at an idea stage. You have no God-given right to receive this investment. These are the bunch of people who have put money behind you, and this is what you think of them. I said, where is this arrogance coming from? Then he like profusely apologized, and he's like, no, sir, I understand, galti ho gaya. And it's a year since that conversation. He's still not been able to close the next round of investment.
Oh man!
Right?
Yeah.
And I think that's where, and when the reality hits you, you realize that बात करना एक बहुत ही easy होता है. You see when you're in a bullish phase of early stage investment, you feel कि हाँ हम तो अच्छा ही बना रहे हैं. What we are making is much sought after. Investors will also seek us, and we'll be able to achieve our dreams. But I think that's a wrong way, because key is in the execution. The key is in respecting people, whether as investors or advisors or in general people who have helped you in such an early stage of your life, who are helping you grow, helping you build your organization. When you keep that in mind, take everyone along, is when you will actually end up creating something. Fundraising and exits will be a consequence of good execution.
Right.
Anything else will be pure luck.
Yeah. No, and that's what I think the point even Nitin was trying to make, I believe, is the fact that this happens is it a function of sometimes the founder just being short-sighted in terms of the, even as when he's raising angel money, like you said, it's probably the first money he's ever gotten in his life or in this company. One would be eternally grateful for that and respect the terms of their agreement. Everything comes with an agreement. There's a legal angle to it. But these are things which are outside. I mean, it's not illegal what he's doing, but it's a decision which he's maybe taking because his mindset has changed at some point due to whatever reasons. It could be, I've heard even VCs would want this at some point.
I've heard it numerous times. So, I know that that's a real issue there, right?
But, I'm also a VC, and I really don't see an issue if there are 10 people on the cap table or 20. As far as the rights are managed. Because once the company is growing bigger, you don't want a lot of different constituencies having rights which might prevent a company from growing.
Correct.
Yeah.
So, for example, if an early stage of angel investors have certain rights on decisions on fresh fundraising, timing of exits, etc. When you've reached the pre-series A, series A, and you've got 2-3 rounds of investment coming after that, you may want to protect their right to exit and stuff, but you may not want to give them certain decision-making power. So as I was saying in a nutshell, if the documentation is managed well, it's absolutely okay having more number of people on the cap table. There could be different reasons people want to clean up so-called the cap table, and maybe because you get an opportunity to buy in at a cheaper price, at a discount, secondary investment.
Yeah, and that's where it gets muddy actually, and
that's where I again come back to the thing that it is all about people matter. So if you invest with back the right people, more often than not, these are softer aspects. So they should respect that you are the earliest investors, and they should be in fact willing to fight for your rights with VCs. And I think if even a VC sees that, he or she will respect that from the founder.
Yeah,
true.
Yeah, I think so. I mean, I think this idea that resetting stuff and that stuff just doesn't really make sense to me. I mean, trying to get somebody out when it just feels wrong, right?
It's a very opportunistic behavior.
Yeah.
And I think if you do that, word spreads sooner or later, and it's a long journey, right?
But how do you make that, I guess you answered that question, right? With by basically trying to control rights is how you kind of solve that issue with different...
I don't think it's a non-solvable issue. It can be easily tackled.
Okay.
And suppose if I'm an angel investor and somebody next round is coming 5x, 10x, good credible institutional investor coming in, I don't see a reason why will I not be able to, willing to give up my rights, because I know that somebody else who is more competent, more equipped in terms of bandwidth, is now going to also have a say in the management. So I'll be willing to give those up.
Right.
And I'm getting a markup, and I'm hoping to ride the upside from there onwards.
Yeah, sure.
In fact, that brings me to my next question around, as in the journey of being an angel investor until there is a next round, after you've made, like you said, the people's decision about, deciding, this is what it is, and that valuation and person and so on. How has it been for you with the companies you've seen, or in your experience seen others, that how involved do you need to be genuinely? I know it matters case to case, but by averages, how involved does an angel in general need to be to ensure that whatever decision he or she made plays out in the right way?
So most of the times, I don't think they are required to be, unless there's a lead angel and he or she has been brought in for a specific purpose to add value to the company. Of late, I've been doing a lot of seed investing where I come in early, or I'm expected to play a lot more active role. So my investee companies, some of them saying, give us more time, come with us, meet our customers, meet our vendors. We want to share those relationships with you. That it's a way of managing a key man risk, saying that if something happens to us, at least you have those relationships. So different kind of founders will have different set of expectations from you. Right. There are some strong teams, second time founders who really don't need any of your intervention. They keep you updated on what's happening. Once in a while, they'll ask you for a comment or a question or your views. And there's a bunch of founders who really want as much as of your time that you can give them. Where I have to tell them that, really, you don't need me so much.
And that's also because of, obviously, the nature of business. I mean, as an investor, pure play, sometimes you do have angel investors who are very domain specific as well, like where you can actually add a lot more value because of being in the same domain. But if you're a pure play money and strategy and...
so you really don't... So somebody like me, I really don't think that I have a lot to say on a day-to-day basis, right? But sure, because you've been in this business for the last 16, 17 years, you've seen so many businesses, so many different people. You can, on a time-to-time basis, periodically add value. You can ask the right questions. At the end of the day, it's their business. It's the founder's business, right? I leave it to them to have the final say.
Yeah.
I give them a suggestion when asked to. Otherwise, I don't interfere.
Yeah, and what would be your advice again to domain-specific kind of guys, or as people who are not pure play looking at it from a point of money? I know there's a point where sometimes a founder goes out looking for money and they find not just an angel but someone who wants to be more involved and wants to become And then you have unexpected equity ambitions as well.
So he or she should become an entrepreneur himself or herself.
Yeah, but
Backseat driving is the most, it's a bad thing, right?
exactly. Yeah.
I mean, when you're sitting in your car and if you constantly keep telling your driver what to do, it's a recipe for disaster.
Yeah.
Right. So I think, but it's when you have domain knowledge, it becomes more difficult and consequently imperative for that person to be mindful as to when to be involved and when not to be involved.
Yeah.
And I think I have a simple thumb rule that only if the founder or the founding team feels the need, you should, contribute. And if you are a domain expert, why anyways give your views for free? It's valuable, right?
Yes.
And if you're asked for, give it. Otherwise, don't.
Yeah, and then
And if you so strongly believe in it, then might as well start your own business. What's stopping you?
yeah, and do you think India has a lot of those? Do you see that as a handicap or as a benefit or?
So again, it goes back to that. It's a very young ecosystem. The successful founders themselves are in the journey of still building out their businesses. So we'll reach there.
But it's early in the startup keyword ecosystem, but businesses have been around, right?
Businesses have been around, but you still don't see enough interaction between the old world businesses and new world businesses, right? And I think the second issue is we are not used to giving our time, spending time talking to people if there is nothing in it for us, right? And that's one thing that you hear from other places, that if people find something interesting, they are happy to make an introduction even if they feel that it's not our cup of tea from an investment point of view.
That's actually the hallmark of a startup ecosystem, right?
Precisely. So I think it's again, it's a growing up stage for the ecosystem. We'll all overcome our insecurities.
Yeah.
We'll be willing to do those things.
Yeah, I think the whole genesis of, I remember, I think there's a very valid term where people say, at the end of every conversation you have, whether you're an angel or a founder or a VC, you should ask, what can I do for you?
Absolutely.
And that should be the attitude which you get in if you want to be part of the ecosystem.
Yeah. So I mean, there are very few people who do that, and I know of such people, and they are so very highly regarded, and they have such high personal equity in the system.
Yeah.
But we need more of those.
Yeah.
Right? For example, I think Kanchan Kumar, right?
Yes, of course.
I think
very hard man to get in India now for a podcast, I think.
But people like that. But you don't blame others too, because each of them are so busy building their own businesses or managing their own funds. It's not fair to expect them to
be able to
if somebody has had a multi-billion-dollar exit and is just on a sabbatical or an investing mode, then he or she will have a lot more free time to spare.
Right. So before we wrap up, I want to understand. I understand we are an early ecosystem, and this is the sort of attitude one should have. But how do you move more of the old economy, since you mentioned them, and since you worked with them in your previous funds? This whole concept of taking money and routing it, like traditional funds were more about sectors and sectoral and so on, right? And I'm guessing people who put money in those funds also treated them as a pure play. If the sector grows, my money will grow. How do you take more people out of that mindset to this sort of investing with heart, as you would say, or investing with pure blind faith in the ecosystem? How do you get more people to be like you?
No. So I don't think I invest in pure blind
I
faith.
heard the word blind faith, and I'm like, that's
a very
no
bad
way
one.
he's going to use that word.
So I think.
But
What happens?
I would say more faith on the person, like you said.
But that comes. I think people do it in the old economy too, right? It comes out of intuition, gut feel, whichever way you put in. But it comes again out of years of being there and doing that, and you must still get it wrong, right? It's never 100% certainty. Everybody will have different styles. People will either go through sectors. People will go based on their judgment on people. So it's a mix of various styles that are required. And, sooner or later, and as we are seeing early, you will see both the old style businesses, new age businesses merging.
Yeah.
And you're seeing early days, right? You saw Freecharge being acquired by an Axis Bank, and a lot of the old businesses setting up groups within themselves to try and replicate or do some of the new age things. I haven't used it for a long time, but when the PayZap app of HDFC Bank was launched, I thought it was a very, very interesting and a very smooth
if only they fix their user experience.
Yes. But it's happening, right? So people realize that if they don't do it, they'll be left behind, again in the online lending space.
Yeah.
At the end of the day, balance sheets, still the large balance sheets are with the old economy or old businesses. So across different sectors, you will see these things happening. You might have acquisition opportunities. So an old logistics company might have an opportunity to acquire a new technology developed by some of the startups.
Right.
So you will see all those things happening.
And where, just to put this question, since you're an investor and you look at exits as well, what do you think of, people talk about IPOs, and in the at least in the Valley they talk about, ultimate exit for a startup is an IPO, or sort of the ultimate large exit can be in that form. Do you even think that's, apart from the very few big ones, do you think that's even a possibility for Indian startups to aim for? Or is it just going to, we have not even got there because hardly any acquisitions even happen. So
so I think, again, the ecosystem has not seen enough exits of whichever kinds. So today I would say, जो भी exit मिलेगा, it's better rather than saying कि IPO ही होना चाहिए. I think more we see models, business models tailored to India, which are profitable, is when you will see IPOs being successful in India at least.
Yeah, and especially the kind of ones which are like the startup sector IPOs, I would say. Not just the traditional business IPOs, which obviously keep happening. But, well, on a closing note, I just want to ask, since you mentioned a point just to put it out to founders out there, right, also in the way they treat angel investing and angel investors. What's the best approach you would give a founder today starting their business in choosing the kind of angels they take money from?
So the way it should work both ways, right? It depends on what is the founder looking from the investor. Is he looking at money, or is he looking for more than money? Right? And depending on that, he or she should zero in on a bunch of names that they would like to approach.
Okay. And there's no measure of how you do that.
There is no measure, right? It's word of mouth. You ask around in your immediate ecosystem, introductions. I think they work the best.
Yeah, and doing this while building your company is not an easy task, of course. So
I always tell everybody, at least have a co-founder. Starting out is very, very depressing. Fundraising is a full-time job.
Yes, of course.
You have more lows than highs. You need a shoulder to cry onto. So
that shouldn't be your angel. That should be your co-founder.
So you need to have a co-founder. So that's why I'm saying it's not a single person's job. It's good to have a co-founder doing this.
Right.
And you will find your right angel, and the angel will find her right founder.
Yeah, that's. I guess that's good.
But, personally, for me, what works is introductions. If I look at my portfolio, most of the deals are through references, through people that I knew. Works for me.
Yeah, so I think that's the same way for a founder to go as well. And I think the ecosystem and maybe even these angel groups and so on, everything sort of helps at least to get you connected to the right people, and hopefully both sides make the right decision in choosing who their co-partners in this journey are. Great, thanks so much, Japan. Thanks so much for being with us.
Pleasure.
And obviously, just everyone can find you on Twitter on @Japan Vyas.
Yes.
So, any pearls of wisdom which you post on Twitter?
I rarely do. I don't have pearls of wisdom. I don't discuss my investments on Twitter.
But is that the best way to reach out to you? Or
that's the best way to reach out to me.
Great.
Or LinkedIn.
or LinkedIn.
Cool.
Great. Thanks so much. Thanks so much for doing the show.
Thank you for having me.
And we will hope to get some comments on our Slack channel as
On
well.
our Slack channel, please sign up. ivmpodcast.com/Shunya One. There's a button over there. Click that. Make a request for the Slack channel, and we will add you to it. Also, iTunes reviews, please. 5-star reviews on iTunes are apparently very easy to do now on the podcast app on Apple. So please kind of do that. It's important.
Yeah. All right. Thank you so much. We'll see you next week.
Thank you.
एक्सक्यूज मी भैया, एक्सक्यूज मी,
बोलिए मैडम।
मेन्यू में क्या है?
मेन्यू में सीन अनसीन है, पॉडकास्ट है, ऑन कोर्स है, साइरस है, मेड इन इंडिया, रीडिस्कवरी प्रोजेक्ट, एम्पावरिंग सीरीज, सेक्स वैक्स है, IVM लाइक्स है, सिंप्लीफाइड है, कीपिंग इट क्वियर है, थिंग्स एंड डेस्टिनेशंस है, माय नेबर जकरबर्ग है और द फैन गराज है। आपको क्या चाहिए?
एक बार रिपीट कर देंगे क्या?
रिपीट नहीं करता हम। आप जाओ ivmpodcast.com पे और सुनो ये सब, या फिर डाउनलोड करो उनका ऐप, सब आपकी उंगलियों पे।